Good morning, Paul Georgia from Allendale. It's October 9th, Tuesday morning, and we've got a bounce in the grain market here this morning and a risk-on type attitude circling around the commodity markets here this morning. We've got crude oil, dollar is stronger, as well as the grain markets. We're seeing some strength in Asia. The palm oil market there is very strong, adding more gains here this morning. China, however, is trying to still align itself with last week's vacation days in China. Soybeans were down 14 cents this morning. The Chinese also said that they will be putting out another 400,000 soybeans out of the reserve for sale this week, so that should go on sale on Thursday. And we'll get some information on that here later on this week. Also, Ukraine lowered its corn production by 1 million tons this morning. Also, there's talk in Australia that the dry weather conditions in the east will continue. Some of the weather forecasters there are calling for some continued dry weather, which could hurt the eastern part of Australia's wheat production, and that's providing some support throughout all the commodities here. We've got some harvest delays in the south, as I talked about yesterday, southern Illinois, and then it goes over into southern Indiana and Ohio, where they've had a lot of moisture. They're delaying soybean harvest. We're seeing some strength in soybean basis in that area. Processors are concerned about meeting their commitments on soybean meal, so they're bidding up on soybeans, trying to get enough cash beans to process here to meet the immediate needs. The export markets, we've got prices now. Corn coming out of Argentina are considered $70 a ton cheaper than feed wheat out of Australia. So when you compare what China might do as far as buying wheat or buying corn, they'll likely go to South America to get some corn out of Argentina. So that's something that we'll be watching as we move forward here. The corn price on the Dalian exchange actually is lower in China here this morning as their harvest gets in full swing this week, and putting some pressure on the corn market in that area. We've, of course, got the big USDA report on Thursday morning. The talk continues to be how much lower is the yield going to be, or higher the yield going to be, and how many acres are they going to take off of the total harvested acres for corn. And we're much in line with that with the studies that we've done. However, we're thinking that the USDA will likely reduce the demand as much as they lower the consumption. So they'll leave the production. So they'll leave the ending stocks very close to where they had them last month, is what our analysis is suggesting. So we'll find out on Thursday morning at 7:30. We will have the USDA harvest progress numbers this afternoon, so we'll be watching for that, thinking that we could be 70% plus done on corn, 60% plus done on soybeans is what the trade's talking about at the moment. In the livestock trade, beef prices a little lower here. We've got had 24 deliveries in against the October contract last night. They were all delivered by R.J. O'Brien. They were all demanded, however, so they will not be circulating. So still expecting we could see a stronger cash market this week. Offers are at the 125, 126 area. Last week we traded at 124. Cutout values were up 58 cents in choice, 78 cents in select. Pork cutout values were up only 2 cents. And as Rich Nelson has done a number of studies here suggesting that the hog market might be getting a little bit toppy in the areas. We've had a sizable run in the hog market, not inconsistent with normal seasonal tendencies. However, we're getting into a time frame here where we've got to be concerned about a possible setback in the hog futures as we go into the late October, November timeframe. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you tomorrow morning. Thank you.